Hello friends, today's topic 2008 big crash. Will it repeat now? I am Dr. Bharath Chandra. Purpose of the video is financial education of society. The Federal Reserve will be having a meeting today and tomorrow to discuss and decide on the interest rate cut in the US. It is expected that they will cut interest rates and make the announcement on 18 September night, that is Indian time. The only main debate is whether it will reduce the rates by 0.25% or 0.5%. In fact, in 2006 and 2007, the US Federal Reserve had kept interest rates very high to control inflation. In September 2007, it started cutting interest rates. Between September 2007 and January 2008, it cut interest rate 5 times by a total of 2.25%. However, probably the US economy was in bad shape and it led to a recession. US markets and global markets crashed in 2008 and many markets fell by 60 to 65% in around 1 year. US bond yields show that traders are bracing for a recession. Even the New York Federal Reserve probabilities model suggests a 61.8% chance of a recession the next 12 months. That is the highest since the 1980s. Easy loans created a housing boom in the US in the early 2000s. Even those with a low ability to repay got a home loan. The huge amounts of money in the system led to inflation to about 5% for 2 months consecutively in 2008. However, this time inflation in the US has been much worse. The average inflation rate in 2008 was 6.3% in the US. In 2022, it was over 8.73%. Last time in 2004-2007, the bubble was in the US housing market. This time, analysts feel that the bubble may be the US tech stocks since they have rallied a lot in the last 2 to 3 years. Even though there may not be any problems in the long-term fundamentals of the Indian economy, the US economy experiences are slowdown leading to a market crash, then all global markets will follow a trend. Analysts were of the opinion that the interest rate cut in 2007-2008 was too late since by then the US economy had already slowed down significantly. They are hoping that it is not too late to cut interest rates now, since once the economy slows down significantly, it will take around 1 to 2 years to recover meaningfully. By then, the markets would have started its downtrend after 4 years of continuous bull rally. When markets go up continuously for a long time, a correction will always happen irrespective of the reasons for the correction. So be aware of the chances of a good correction and don't be surprised whenever it happens. It could be the first major correction after the March 2020 fall due to Corona. Most investors in Indian markets currently have entered after the April 2020, hence have no experience of seeing a major fall in the markets. Apart from the fall in stock prices, the mental anxiety that a market fall causes is what makes investors stressed. When we are mentally prepared to see our portfolio down 20 to 30% and be comfortable, then we will be able to manage the situation in a better way. For example, if your portfolio is worth 10 lakhs currently, mentally think it's only worth around 8 lakhs. If you constantly visualize it this way, if and when it really falls to that level, you will not feel anxious at all. Last time between September, December 2007, markets started rallying, the rates were first cut. Nifty had gone up by 35% in 4 months and later crashed by 60% the next 10 months. Let us see whether history repeats in a similar way this time too. At the end of the video, here is a question. If there is correction after a few months, what percentage fall are you expecting for Nifty? 4 choices in front of you. A, less than 10%, B, 10 to 20%, C, 20 to 30%, D, more than 30%. If you are not the member of the channel, this is the time to subscribe. press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye and all the best.